Hello guys, welcome to today's session in Concept, and today we will be learning about how you can make a passive income through your investing. But before starting the video, if you are new here, you can go in the description, there is a link below. You can download and install the web application of Concept Wealth. Right now, when you will install the application, you will get some free tools there that you can use for your investment journey. And of course, if you're having any kinds of doubt and query, so there will be support and numbers also available, right? So you can contact us and we will be there to sort your queries out. Now, moving towards today's topic. So as you can see here, we are talking about the dividend yields, right? Now, when I'm talking about profit, okay, so there are two things that out of which you can make the profit. For example, if you are investing in some stocks in a mutual fund, right? So for example, you have bought the stock or you are investing in it, for example, and right now the price is 100 rupees, right? And you will got the profit when this price will reach to 150, okay? And that is how, so at the time you will buy it and this time you will sell it, right? And in between the process you will get the profit of 50 rupees. What if I'll tell you, you can also get this profit without selling your stock, okay? You don't have to sell your stock, but still you will getting the profit, and that will be your passive income in investment, right? And that is when the dividend yield funds comes in the scenario, right? Now what the dividend yield funds are, okay? So first of all, there are two types of things. For example, there is a company that is making a profit, okay? So there is a company that is making a profit, okay? Now it can be invested in two types, right? First one is that, for example, there is a company who is a small company, a growing company, or you can say a startup, right? So whenever this company will get a profit, okay, so this company, what will it will do, it will just reinvest this profit in the company itself for research, you can say, for management, okay, and for many other things, because it is a growing company, right? So if it is getting some profit, it will reinvest that profit in the company and make it a larger profit in the near future, right? Then there is a well-established company, okay, and whenever this company will make some profit, so this company will, what it will do, it will provide its profit to the shareholders, that is you guys, okay, and that is what we call the dividend. Now the dividend is made out of two words, that is divide and end. It means the company is dividing its profit at the end. It can be in quarterly or in the yearly. Now it doesn't matter if you are having 1% share in the company or you are having the 30% share in the company, still you are a owner of that company. It doesn't matter how much share you are holding, right? So that is when a well-established company makes its profit, so it divides its profit at the end, okay, to its shareholder, that is you, right? Okay, now let's go ahead here. Okay, so here I can see dividend yields. So it is also written here, the dividends are important aspects of investing equity or equity related instruments. Many companies share a portion of their profits with their shareholders. That what we discussed before, right? Now there is one more thing. It is not mandatory, as it is written here, it is not mandatory for a company to share its profit with the shareholders, okay? There must be a company who is sharing its profit from a long time, okay, but he is not liable to do that, right? The company can stop sharing its profit anytime, okay? The company can stop sharing its profit anytime. And there might be a company who has not shared a single penny, a single profit with the shareholder, but still it can start giving profit to the shareholder from tomorrow also, right? So it is not mandatory to any company that it has that it will share its profit with the shareholders, okay? So it is written here, it is not mandatory for company to offer dividends, right? But the company choose to declare them, okay, and make invest out of their more attractive. So as I have told you earlier, so there are two kinds of company. One who is reinvesting the profit in itself, and there is a second kind who is providing you the dividend, right? So there are two types of company, and the company is not liable to provide you those dividends, okay? It is the company's choice, right? It's company's choice. Okay, now let's moving ahead. Okay, then we are coming on the dividend yield. So the first question is, what is dividend yield? Okay, what is dividend yield? Now dividend yield is a formula Dividend yield is the formula, and in this formula what we divide, so basically it is the dividend or the profit of the company that it is dividing, okay, and in the you can say denominator or in the lower part, what you choose, the share price of that company, share price of that company. Okay, now what if I'll tell you there are two types of company, for example the first one and the second one, and both are providing 10% dividend to the shareholders. So are they providing the same kind of profit to the shareholders or not? So the answer is no. What if I'll tell you the share price of the first company is 500, okay, and the share price of the second company is 2000, right? 2000. So when the first company is providing 10% as a dividend, it means 10% of this share price, so it means 50 rupees, right? And when the second company is providing that 10% dividend yield, okay, on its share price, so that means it is 200 rupees, right? So it is very important not to go with the dividend yield ratio, dividend yield percentage, okay, but also to see like what is the market price or share price of that particular company. That is the most important aspect, right? So you can also see here, so the definition is also written, the dividend yield is the dividend paid per unit divided by the market price, as you can see here, okay. And dividend yield mutual funds are equity funds that invest in equity associated instrument में भी कर सकते हैं, okay, and these company are known to declare high dividends. Got it? Okay, now let's go ahead. Okay, now the features of a dividend yield company. So what are the features? So we will discuss that. The first one is the source of income, right? Now since the dividend yield is the key criteria, अब यहाँ पे क्या होगा, ठीक है? तो you can अभी जैसे source of income है ना, तो you can expect a a regular or you can say a fixed amount of income from them also, right? So you can expect a consistent return, आप यहाँ से expect कर सकते हो, ठीक है? Now it depends on the company if they are booking a profit or not, right? That is also one of the conditions. Now the second thing is that it provides you a lower risk. If you want a lower risk, because if a company is providing you a dividend, it means the company is doing good, right? So normally only the good established company, only they provide dividend to the shareholders so as to maintain their integrity also, right? Because they want to be in the good books, or they are providing the dividends from very long time, so that is why they want to maintain their record, and that is why they provide dividends also, right? And it lowers the risk also. Why? Because the dividends are paid on a regular basis by extremely stable organization, you can see there, okay. So only the stable organizations go with that. Now you can see in the market they have a strong brand, and these often measures cooperation with the sustained market capitalizations. Now what it means, for example, if the only stable organizations are providing it, so it means they are in the run for a very long time, right? So if there will be volatility in the market, so those company will not be affected by that you can say by that volatility, right? So it will provide you a consistent and a consistent profit and also dividend on them. Got it? Okay, let's go ahead here. Now I can see what are dividend yield funds invested where. Okay, sorry, my bad. ओके तो कहां इन्वेस्ट किया जाता है, ठीक है? तो यहां पे आप डेफिनेशन लिख रहे होंगे, अ डिविडेंड यील्ड फंड नीड्स टू इन्वेस्ट एटलीस्ट 65%. ओके, फॉर एग्जांपल यू आर इन्वेस्टिंग समथिंग एंड देयर आर सम फंड मैनेजर, ओके, सो यू हैव प्रोवाइडेड देम योर कैपिटल. नाउ it is instructed by the SEBI, okay, Security Exchange Board of India. So it is instructed by them that 65% of the portfolio it should be invested on only in the dividend yield funds, right? So whenever you invest like 100% of your capital in your portfolio, so your fund manager will invest 65% in the dividend yield funds only, okay, and the remaining 35% it can be on other equity or debt funds also, right? So this is one of the thing. Now who can invest in dividend yield funds? So these funds give us stable return, okay. So the person who is seeking who is seeking a long term run in the market, who wants low risk in the market, so that person can invest in dividend yield funds. Then the second thing, a person who wants a passive income from the market, okay, along with the profit also, right? When he will sell the particular investment or a particular stock, so he will get a profit also. But if he wants a passive income, in the meantime regularly, for example, for every month or year, so he or she can also invest in this dividend yields, right? Now, can dividend yield funds to be a source of passive income? So I have already answered this question. Yes, it can be. Okay, there is one more thing. For example, you are going to invest in a dividend yield mutual fund, anything. Okay, so there is a date that is called ex dividend date, ex dividend, ex dividend date. Now, only the people, so for example, there is a company and the company chooses ex dividend date as, for example, 12 Feb, 12 Feb. Okay, so what it will does, the company will provide the dividend yield to all its customers, to all its shareholders, okay, on 12th February, but only if if they have invested in the company on 11th or till 11th February, right? So if you want dividend from this company, so you should have a stock, you should have a ownership in this particular company, okay, on what date? On 11th February. Only then you will get a dividend on 12th February. Okay, so every year on 12th February this company will provide you a dividend, and that is what we call the ex dividend date, right? So this is one of the most important criteria that you have to follow. Okay, if you don't have any stock, any holding till 11th February, so you will not get the dividend from that particular stock. Or if you are having ownership on 12th February, so still then you will be eligible next year only. Okay, not for the remaining year, right? So this is the thing that you have to keep in your mind while you are doing the investment for this purpose. Now, why should you invest in a dividend fund? So first, this is a regular source of income, as I have told you. Even if the company will provide you the dividend, or in case you are going with the company who reinvest this dividend, okay, so in that your capital will increase and it will give you much profit after after some years. But if a company is providing you a dividend, it means it is not providing all the profit to the shareholders, but a part of the profit. For example, you can say if the company is making a 30% profit, right? So this company is making a 30% profit. Now it is providing you dividend because it is a well established organization, right? That is why it is providing you the dividend, although he is not liable to do that, right? But still it is providing. So it will not provide all this 30% of its profit to the shareholders. What it will do, it will reinvest the 20%, okay, and the 10% will be divided among the dividend you can say shareholders, right? So this is one of the thing. Now the less volatility, so I have told you the market which are providing you less dividend, they are well established organizations, right? So they don't care about market volatility. Why? Because the market volatility does not affect them that much, right? So they have a very little impact on the underlying firms, you can say that. Now, good returns in a long run, and if you are holding on to the stocks of that company, if you are investing, if you have a good investment in that company, so in the long run you will get a very good profit, because some of the profit is given to you and your remaining profit is reinvested in your investment. Okay, so that is why it gives you a very good returns in the long run, right? So guys, I think you can go through all this once again. You will be much familiarized about what are these dividend yield funds, okay, how they can be useful to you, right? If you want a passive income from them, so you can also go with them, okay, and it is they will be less impacted with the volatility of the market. So many people are also concerned about the market also, what if the market will fall, okay? So if you are having that kind of concern, so you can definitely go with this dividend yielding funds, right? So guys, that was it for today's video. ठीक है, अगर आपको पसंद आया होगा तो you can like the video, you can comment us down for further information, okay? If you are having any kinds of doubt, so you can comment us down. अगर आप नए हो तो you can subscribe the channel also, right? Thank you so much for giving your time. This is your trainer Ankit Singh Rawat. Have a good day.